Toll Brothers, ticker symbol TOL, is a US luxury home builder showing strong revenues and great stock performance over the past 6 months. The housing market is showing signs of recovery, and Toll Brothers look set to be one of the frontrunners in sector growth. In this video, I'll outline my reasons for why it's my contender for high conviction trade for stock option premium sellers and traders of the wheel strategy. Before going forward, please understand that this video is made for entertainment purposes only, and none of what I'm about to say in this video constitutes any financial advice. This is my own opinion about a publicly traded company, and I urge you to research it for yourself before you make any of your own financial decisions. So with that in mind, my potential trade for next week is to sell to open a put contract at a strike of 60 with an expiry date of June 16th at a potential premium of around $1.40. I'll be explaining the details of this trade and what led me to select this underlying stock in the rest of this video. Okay, so on to the analysis. Toll Brothers is a luxury home builder operating in 24 states in the US with its headquarters in Fort Washington, Pennsylvania. The company designs, builds, markets, sales, and arranges finance for a range of homes in luxury residential communities. The company was founded in 1967 by two brothers, Bob and Bruce Toll, who built their first home together in southeastern Pennsylvania. Its initial IPO was in 1986 on the New York Stock Exchange and has since grown over 1,800% from the early 2000s onwards. It has a market cap of $7 billion, putting it well in the mid-sized market cap group. It employs 5,200 workers throughout its various home building and selling segments. Toll Brothers is the fifth largest home builder in the United States based on home building revenue, and one of the largest luxury home builders. The company has received many accolades, such as National Builder of the Year Award by Builder Magazine and also by Professional Builder Magazine. For the 8th year, it has been named by Fortune Magazine as the world's most admired home builder in their 2023 survey. Looking more recently, it has easily outperformed the S&P 500 over the past 12 months, showing an increase of over 32.5% compared to the S&P's -6%. Year to date, it is up 25.5%. So, how about its performance outlook, and why have I shortlisted this stock? After running a screener on TradingView, I quickly analysed the resulting stocks, looking at recent earnings and key fundamentals, chart technical analysis, company news, and analyst targets. From that data, the stock that stood out was TOL. And why was that? Well, when choosing a stock to trade the options wheel strategy on, you must ask yourself one fundamental question. Would I be happy to own this stock? Firstly, its potential premium is pretty good compared to the other underlying stocks. However, high premium shouldn't be the only selection criteria. Don't forget, if things don't go well, you could end up getting assigned the underlying stock, and a poorly performing company may take a long time to recover, or even worse, never return to the heights of the price you ended up buying the stock for, leaving you bag holding a loss-making investment. However, in Toll's case, indicators stood out to me which proved that if I were to be assigned this stock, I would be confident holding it, collecting dividends along the way, and selling it in the near term for a total overall profit. So let's look at the factors which has led to this selection. The housing sector has been under a lot of pressure over the past 18 months. New home sales in the US dropped almost 50% from 2020 highs, but are now showing positive signs of recovery, with NAR chief economist Lawrence Yun stating, "Home sales are trying to recover and are highly sensitive to changes in mortgage rates. Yet, at the same time, multiple offers on starter homes are quite common, implying more supply is needed to fully satisfy demand. And this can be seen with a 21% upturn since mid-2022. In an interview about the home builder market, the outlook is being viewed in a similarly positive light, with Tracy Ryanek, Zacks senior equity strategist, saying home builder stocks suffered last year as the Federal Reserve raised rates aggressively. The housing market, which has plunged from its pandemic-driven highs, is showing signs of stabilization lately. Home builder sentiment has improved for the 3 consecutive months. New home sales rose in March to the highest level in a year. Per CNBC, almost half of the homes on the market are selling within 2 weeks. Speaking of home builder stock prices, she goes on to explain that home builder stocks always rise on the hope trade into the summer and then weaken, suggesting stock prices should remain strong for the next 2 or 3 months, a time frame to keep in mind when selecting option expiry dates. Looking more specifically at TOL, Zacks Equity Research appears upbeat on the stock price outlook, saying, for TOL, shares are up 3.36% over the past week, while the Zacks Building Products home builders industry is up 3% over the same time period. Shares are looking quite well from a longer time frame too, as the monthly price change of 4.72% compares favourably with the industry's 5.94% performance as well. They sum up the article optimistically, stating, it shouldn't be surprising that TOL is a number 2 buy stock and boasts a momentum score of B. If you're looking for a fresh pick that's set to soar in the near term, make sure to keep Toll Brothers on your shortlist. In another recent article, Zacks points to Toll's earnings performance, saying, the stock has a great record of positive earnings surprises, as it hasn't missed our earnings consensus estimate for any of the last 4 quarters. And therefore, Toll Brothers currently has a Zacks rank of number 2 buy, thanks to rising earnings estimates. And finally, they recommend Toll as a bargain stock, saying, Toll is trading at a reasonable valuation. In terms of price to sales ratio, which is considered as one of the best valuation metrics, the stock looks quite cheap now, adding, Toll appears to have plenty of room to run, and that too at a fast pace. Furthermore, 10 analysts' stock price targets for Toll at tip ranks shows an average upside of 7.45%, with 6 analysts classifying the stock as a buy. So all this points to a positive outlook for the home building sector as well as for TOL. Looking at some key fundamentals, we can see that price to earnings is very low at just 5.41, which is much lower than the real estate development industry average of around 50, so that's very good. They also issue quarterly dividends at a current rate of 1.34%. Their last dividend payout was 0.21 per share, so if you owned 100 shares, that would equate to $21 for that quarter. As mentioned in the Zacks article, Toll has been consistently publishing positive earnings reports, although it doesn't always result in an increase in stock price. Looking at revenue growth, we can see that revenues have increased year on year very nicely, going back to 2016, with just one blip in 2020 with a 2% fall from the previous year. I wonder what the cause of that was. Since then, revenues have grown by 45%. You can also see strong increases in gross profit and operating income. Net income has been flying up with increases of 86% and 54% for the past 2 annual reports. Onto their balance sheet, and their current assets far outweigh current liabilities by over 3 to 1. This is a very stable company. They also have $1.35 billion in cash, and this would more than cover their short-term debt by a factor of 12. So, another thumbs up there. Over to free cash flow, and as you can see, they have a sizable amount of cash on hand at just under $1 billion. However, this has fallen by 26% since last year, which is due to extra purchases in investments and fixed assets. The company is clearly in a healthy situation where it has cash to pay out dividends, buy back shares, make acquisitions, and so on. Just a couple of quick stats. EBITDA margin is in around the 15% range, which is good. The S&P 500 average is around 10 to 16%. Return on equity is good at 23%, above the S&P 500 average of around 14%. Return on capital is well over the 10% minimum expected, and debt to equity is well under 1, indicating that the company is easily funding the majority of its activities. So all in all, this gives me great confidence in the financial health of Toll Brothers. We want to select companies that can survive in times of economic hardship and thrive when things are good. Okay, so here we have the daily chart showing the past 2 years. As you can see, Toll was posting higher highs than its recent high of around $65. And then Toll took a big hit during the COVID outbreak as the housing market went into turmoil, and it took until October of last year to begin its recovery. Onto the 1-year chart, and you can see Toll has been on a sharp upward trend since then in a clear upward channel. Looking over the past 6 months, the stock is showing good support at the -2 standard deviation line and is now sitting just above the -1 standard deviation. This is a good place to open the trade as the stock has been holding well onto the -1 standard deviation line for the past 2 months, showing good consistency. The stock is trading well above the 200-day simple moving average, which is imperative, and is also opening up a nice gap above the 50-day simple moving average. The stock is showing strong momentum. The stock also looks to be pushing above the 9-day simple moving average again, indicating it doesn't want to give up its short-term momentum. There is clear support at the $62.5, $61 and $60 levels, with the lowest looking like a good place to set the strike price. It's a 5% drop from the close of week price and at least 1.5 standard deviations lower. The 14-day RSI has been holding above the 50 line for around 2 months now, but not close to the overbought 80 line yet. Finally, looking at the option chain for our trade, we can see that at the strike of 60, delta is 0.29, which is below the maximum of 0.3. Come Monday or Tuesday, I'll be giving this trade a final assessment and, all being well, sell a put to open the trade. And there we go. Hopefully that was a useful and informative video. Please let me know if you want more in the future down in the comments below, and also please like and subscribe to receive more option trading ideas videos. If you enjoyed this video and want to see more option trading videos, head on over to our website at wheeloptiontraders.com. Here you'll find our Options Wheel Strategy Trading video course. We have over 50 videos and counting, from the basics of understanding and trading options through to using the wheel strategy to get the most out of your options trading. We also have an amazing options wheel strategy tool that you can download. It tracks all your trades in real time and provides key insights to help you with your options trading decisions.